Scott, Bill Gates has labelled Australia's ban on nuclear political. He seems to suggest that we have missed an opportunity here.
And this is a really tough one, Pete, because it seems like for the most part, the political parties are following the public opinion. But I think his point more broadly is that he believes at least energy policy and frankly the physics of energy and the safety and efficiency of nuclear energy is well worth doing despite some of that political drama. His view, I think, and we're trying to read between the lines here, but it's been pretty clear, is if we simply remove the rules and started to do it, it would actually be a net positive for Australia's energy supply. My long-term view has always been that we diversify when we invest. We probably should diversify on the energy front as well. Look, I'd love to think we can get away with renewables with no need for managing nuclear risk and nuclear waste. By the same token, during COVID, we put work into 4, 5, 6 different vaccines and sort of waited to see which one worked, knowing full well some would die on the vine and that money would be, in air quotes, wasted, but at least we got there quickly. It strikes me energy policy-wise, given the challenges of climate change, we should be saying, you know what, let's throw everything at this one. We know we'll waste some of that money. We have to be okay with that if we want to make quick and very impactful change when it comes to energy supply.
Yep, okay. Scott, UBS says the RBA may not hike rates in February. Interesting, because a lot of people think that they will.
And a lot of your viewers now sitting up very straight, Pete, hoping that UBS is right, because, of course, none of us want to pay more on our mortgages over the next few months. And the general consensus is, as you said, that they will increase rates. UBS saying, look, they're not making an outright prediction or saying it'll definitely happen. Their argument is that the RBA's expectation for inflation for the December quarter just finished was an annualised inflation rate of 8%. Now, current estimates from a lot of economists are maybe 7.6%, give or take a percentage point. So if they get you there, UBS's argument is, hey, the RBA said 8% would be where they thought we'd be, and they would have put policy prescriptions in place to deal with that 8% inflation. If it's lower than that, it gives them some wiggle room if they want it to say, you know what, we can actually afford to not put rates up in February, give ourselves a bit longer to see what's going on. We know, of course, inflation month on month fell in the US in the last set of numbers that were released. So if the RBA wants to, it can assemble a reasonably good set of data to say, you know what, this is why we're going to give another pause. As you say, most economists still expecting the market, still expecting rates to rise in February. That's probably the safest bet. But to UBS's point, it's absolutely not a fait accompli, particularly because the RBA has shown itself to be a little bit dovish, a little bit keen to make maybe, have rates lower rather than higher over, frankly, years. If that remains their case and they're looking for opportunities, this may well be it.
Okay, and just finally here, Scott, Spotify has announced overnight it'll axe 6% of its workforce. That's the latest round of major layoffs in the tech sector. What sort of an example does this set of where this is all going?
It's incredible, isn't it, mate? Look, tech layoffs seem to be like cockroaches. There's never just one. As soon as a couple of companies did it, everyone's jumping on board. Yeah. Pressure from shareholders, of course. Pressure financially. Spotify still hasn't turned a profit, by the way, so they're still existing on the good graces of their cash balance and the money from investors. So if you think about that and say, okay, what can we do? The CEO is saying, look, I got too ambitious. I invested ahead of growth, hoping that growth would catch up. I got that wrong. Add that to the likes of Amazon, to Google, to others who've said, you know what, we're going to have to lay off some staff. You know what, we talk about companies cutting costs as a good thing. I think it's probably worth thinking about CEOs that go on increase their costs in advance of that growth and then cut them, whether that should be reasonable. The ones that aren't cutting costs right now doesn't necessarily mean they're lazy. It might just mean they didn't go over the top in the first place. But yeah, look, I don't think this will be the last round of tech layoffs, unfortunately. No. A lot of companies saying, you know what, this COVID bump, Spotify, think about that, streaming music and podcasts. People are back to work. People are back in the office. They're not listening to as much Spotify as they were. Same with Amazon, not shopping online as much, and so on and so forth. True. So there's a lot of right sizing, to use the horrible jargon, because I think some companies get a little bit carried away that the new normal would be as good as the COVID period.
Scott Phillips, the Chief Investment Officer at the Motley Fool. See you next week, Scott.